Hello guys, welcome back to the channel, best place for long-term stock investors. And today, we will be talking about Ataims, the issue that they're having with Dyson, as well as Serbadk, the story that will never go away. All right guys, as usual, none of what we say should constitute financial advice. If you want this sort of advice, make sure to speak to a professional. Additionally, we do not own any of the shares mentioned in this video.
So we took a break in November, but we're back in December. As a continuation to our Project Small, we'll be talking about 3 companies: Success Transformer, Kotra Pharmaceuticals, and Yuli Corporation. So if you don't want to miss out on the early bird special, the last day to get that offer is on the 2nd of December, and the registration is in the comment section below.
And guys, just before we begin, just to remind you, we have a question of the week section, which you can ask us a question, and we'll try our best to answer it every week. You can ask us either on YouTube, Instagram, Facebook. We have a Discord channel, etc., etc. All right, John. So we'll start with Ataims. Actually, I never know how to pronounce it
correctly, right? Ataims,
yeah, or ATA-IMS or ATA-IMS. I don't know. Do you know the correct pronunciation?
I think the first one you said was probably my guess as the correct one.
Ataims.
Yeah,
okay.
Actually, they used to be known as a different company before that.
Really? Yeah.
Yeah.
Okay. So anyway, basically, 80% of its revenue used to come from Dyson, and it was just announced very recently, right, that it's dumb, right? It's got dumb. Basically, because of labor concerns, right? They disagree, obviously, with the way not just Ata actually. I think a lot of companies in Malaysia, how they, for lack of a better word, some say exploit, some say abuse, whatever word you want to use, on all these foreign labor. And, it's very common in Malaysia for us to do this, for companies to do this. But I think with, companies around the world having this ESG thing going on, they will, obviously part of that is the labor concerns that they have to take care of. Now, that is not really what we're going to talk about today. Whether or not it's fair or whatever. The fact of the matter is Dyson has now decided to terminate the relationship essentially with ATA, and obviously 80% of revenue is going to be huge. Right? And there's a big dump. You guys can check the share price, right? It's not, it looks,
it's not pretty lah. It's not pretty lah.
So yeah, what do you think this means, for Ata?
I think quite difficult to make up the new revenue. More importantly, going back to what you said about labor issues, I think it comes back to the supply chain and the value chain and understanding where Malaysia positions itself. A lot of what Malaysia manufactures or does, even in the electronics or even glove industry, requires a lot of labor.
Yeah, 100%.
And that's why I think the issue first surfaced in a very big way because of Top Glove's CBP ban and all. And then you've got the glove players like Supermax all having to handle this. And then now it's starting to manifest in the electronic sector. So I think where I want to start off with is actually understanding where these players are in the value chain. And Ataims is actually one of the largest in the world. It's actually number 22 on the global list. Huge. 26 VS Industries, I think the second largest, in the Malaysian ranking comparatively, and SKP Resources at number 14. So why is this important is because if you understand the EMS value chain, right, it requires, even though we say automation, a lot of these EMS players rely heavily on manual labor to actually assemble all these kind of parts. It's something very tedious. Even the biggest guys in the world like on High Precision, Foxconn, a lot of the work is actually manual labor. You can't do away like a wafer plant like TSMC, where you can have it heavily automated. They can even say there's a term for it, MJ, it's called black factories.
Ooh.
You don't even need to have the lights on because everything is run by robots. Right. But as you travel down the value chain, or a lot of it is manual labor. And this is a chart that was produced by The Age. I think it was quite a good visualization. As you can see, VS, SKP, ATA, K1 is not as big as VS, SKP, or ATA IMS, but yeah, it's there. And the next infographics I want to show you is actually, because they are so low in the value chain, very tedious manual labor. Look at the margins, MJ. It's not a space that you really want to extract high value margin services. So if we relate that back to, as an investor, when you are investing in these kind of companies, right, you have to be very cognizant that, one, they are very dependent on large customers like this, customer concentration. Two, they play in a space where labor is continuously going to be an issue. So something like this that hits Ataims is going to hit someone like SKP or VS, whoever plays in this. So it's not going to go away. It's a variable or a risk, either way you want to look at it, when you invest in EMS companies. That's the point I want to make.
Yeah, and I think that it's just unfortunate that Malaysia has cheap labor in a way.
Yeah.
And I think part of the reason that labor is involved also is because some of these things, like like Dyson, for example, there's so many different products.
Correct.
Right? And then the components itself then multiplies.
Yeah.
So you can't really create automation at that level.
Correct.
You can create automation at maybe on a chip level, I guess. But on that kind of level where it's assembly, where it's, so you need hands, basically, right?
Yeah.
Or at least someone to be there to handle things.
There's a term for it, MJ. It's called high product mix, low volume.
There you go.
So that means you have multiple items, multiple products, because there's the order unit is actually very low. So it's like, how many vacuum cleaners can you sell? You're not going to sell them in the millions, right? You're going to sell them in probably the thousands or the 100,000s. And then you have other products. So when you want to automate these kind of things, you want to make sure that your CapEx spend, you get that kind of volume. If not, how you
need to spend a lot of money for automation, right?
Correct.
Like the only reason that, let's say, a company like, a country like Japan spends on automation is because the alternative is more expensive, which is to hire people.
Correct.
Right? So Malaysia is not quite there yet. And I guess this is also a fact that we're seeing of ESG, right? So I think this is a good sign that people need to... I think the discussion around... because when we talk about IMS, if you're in the industry, then you know that the part of the conversation is someone like SKP Resources.
Correct.
Because they also have Dyson as their major customers, 80-90% of revenue.
Yeah.
And I think there's a lot of discussion on, that's why you shouldn't need to have a single customer, in this case, Dyson, right?
Yes.
I think that is not the correct way to look at it. Because we talk about how this is bad because they are the only customer.
Customer concentration risk, all this kind of things.
But we forget that all the good stuff that happened as a result of customer concentration, right? So we cannot say that, we choose one over the other.
Correct.
And I think much more important learning lesson for investors now is to actually analyze ESG trends a lot better. It's not whether it's concentrated or not. Now the question is, if your company has concentration with their customers, then are they abiding by global ESG standards? Correct. I think that is way more important. Because even if you have a lot of customers, but if all of them have to abide by ESG standards, then it doesn't matter at all. Right?
They're all in the same boat. Actually, the other good example that I would like to give is actually the palm oil industry. No matter what you say, he's more efficient or whatever, right? Customer concentration, they're all on the crosshairs of the European Union and all that for ESG.
And really, because it's like it comes with the package, right?
Yeah.
If you want the kind of growth that Ataims or SKP Resources have done, right, you need to take the good and the bad, right? You can say it's bad that they have one customer, but they wouldn't be this successful without it.
Yes.
So I think that's all I have to say about Ata.
Yeah. So understand the value chain. I think as a conclusion, understand the value chain. Understand that when you invest, it comes as a package. You cannot pick and choose. That's it.
All right, guys. If you didn't already know, we do have an exclusive research team, and we're always on the lookout for very talented individuals to join our group, so that we can help build you into a much better analyst. And of course, you can be part of our analyst team as well, right? So that essentially you can work with people who have the same interest in you, right? The stock investing world is quite a lonely world. There's not many people super interested in stock investing and deep analysis. But if you are one such person, do give it a shot to try to work with us. Now, how can you do that? Well, you can write us a research report on any company. And if we find that the report is really well done, we will consider adding you into the research team. Now, the key thing is that you need to do it in the Google Sheet or Google Doc format. And don't just give us the financials, right? Give us a lot more, like what are your qualitative takes on the business? What do you think of management? What do you think of valuation, etc., etc.? So you can send your report to this email right here. All right, so John, we're back. Latest news on Serbadk is that Bursa has rejected the second request for an extension of their annual report for financial year 2020 release. People are already in 2021. And
they changed financial year. No, because it was financial year December. Then they changed to June. So they already second extension and more.
So anyway, for those of you who don't know, maybe some timeline for you all. In May 29, right, Karim, which is the CEO, says that the company has done nothing wrong. Right?
This was after KPMG raised the concerns, right?
After KPMG raised the concerns. Then suddenly in October 2022, Serbadk shares got suspended, mostly because of some context. After KPMG was removed by Serbadk.
No, they actually resigned.
They resigned, yes. Yeah. Then EY replaced them. So EY conducted this thing called a special independent review. Mm-hmm. And a lot of this report was something that Bursa Malaysia wanted public, but Serbadk didn't give it. So they didn't give it, so their shares got suspended. And then after that, Bursa went to court November 23rd to essentially get them to release it. And of course, November 25th, that's when the extension got rejected.
Yeah. Before that, just to add, I think the reason why Bursa seek the court order was that Serbadk already received the report, and there were actually rumors that Serbadk didn't want to release. Serbadk received the report and didn't want to release it.
Yes, correct.
So more importantly, I think from an aspect of an investor, I think where Serbadk, I mean, kudos to Serbadk. Serbadk wants to make things fair, and this is a game where corporate people who have information access can play this game, and just a good shout out to Bursa to actually try to level the playing field.
At least.
Yeah.
Okay, so anyway, it's a very long review, right? But we just want to show you some of the important points, right? So the objective of the review is that EY basically wants to see whether their findings tally with what KPMG said. Essentially, whether KPMG is lying or not, right?
Yeah.
So the scope, which is essentially what they are looking at and analyzing, is essentially 11 customers, 6 suppliers. And then for the IT contracts, you have like 6 customers and 2 suppliers. And this supplier in Bahrain, right? So because a lot of people was asking about the the relationship that they have with the Middle East.
Correct.
So they want to see how legitimate there is. So if you look at the first scope, right, the 11 customers, right, the sum involved is 435 million. By the way, everything included, all the scopes included, the financial impact.
It's about a billion, right?
1.4 billion. Right?
Yeah.
So anyway, the total sum involved is about 435 million for these 11 customers. These are, I believe, the local ones. They sent 12 external confirmations, but only 1 written.
Yeah, maybe some context also, MJ, before we talk about external confirmation. So what the auditors will do is that they will send out letters to all these clients or the suppliers, and they are seeking, are you a client of Serbadk? Yep. Is this contract something that you recognize, and please give a confirmation. And this is actually a very normal procedure for auditors to do, because they will not, sometimes they may not have the resources to physically visit all of them. But when you don't get this kind of confirmation, then maybe you can continue the next one. So
what was interesting was that after that, there was this guy called Encik Hafiz, I think, that actually responded. But then when they want to find out who this Encik is, they couldn't really find out. No? So essentially the conclusion of EY was that they couldn't verify, essentially. Well, not just who the clients are, but essentially like how these confirmations got signed even.
Yeah.
So that's a big question mark. So this on the customer side. Then the local side, right? I didn't add so much on the suppliers here, but the local side, So on the IT contract side, right? $76 million is involved. Now the key thing is SDIT, which is Serbadk Dynamic IT, right? International. They claim that they made a profit of 16.6 $8.1 million US dollars, but only 5.5% of that has been collected. And worse still, right? The customer has no address.
Yeah.
The customer that they are billing, right?
Yeah. You're correct.
So okay, so another question mark. Now, if you look at Bahrain,
this is a funny
this is
one.
12 million US dollars in fraud. So what is weird is that they, the guys actually went to Bahrain to see like where the customers, where the suppliers are. So when they visit the supplier, they found a supermarket. So you wonder whether the suppliers actually supply fish instead of IT contracts, right?
Yeah.
And then when they visit the customer, they found a workers' accommodation, right, which is a place that their workers stay. So there's actually a lot more to this, but some of the weird things that are going on, at least according to EY. So it's a very funny report, and there's a lot more to it, as I said. But my overall thoughts are that I think that the one thing we have to understand about independent reviewers, or in this case, EY and KPMG, is that because they're so big, and the beauty is that because they're so big, right, they can be more independent.
Correct.
Right? And people always ask us like, hey, like accounting firms, all that, like, are they trustworthy? And there are some extreme cases where they are not, like for example, Enron, right, with Arthur Andersen back in the 2002. But by and large, they are, because they have their reputation to protect.
And they want to keep their license, because the moment one bad press rep or whatever mistakes that they make, right, they may lose their license.
100%.
Yeah.
So, yes. And I do believe that these reports should be taken very seriously.
Yeah.
And there's no, what's the phrase again? There's smoke lah. Let's put it that way.
Actually, just to add to the smoke, now you look back at the 50,000 feet, this is probably the 20,000 feet view, right, MJ? The 50,000 feet view is that whenever there's some irregularities being raised, what they do is they take people to court. They take legal action. Who did they take? KPMG.
Bursa Malaysia.
Right, Bursa Malaysia, and then now EY. So you appointed them, you signed a letter to get them to do the SIR, and now you want to take them to court. So what are you trying to do? You're trying to as long as someone doesn't agree with you, then you start attacking them. Now, let me ask, in your experience, MJ, have you seen any listed company that takes the exchange to court?
No, I like the spirit, that's for sure. Yeah, I mean, of course, we cannot review the name, but we even know people personally who created videos, right, out of Serbadk Dynamics, and then their video was requested to remove, which is why we are very surprised that none of our videos have been requested to be taken down. So that's very interesting. Obviously, I hope they don't. I think everyone needs to watch what we are sharing.
Yeah.
But yeah, I mean, what are some of your conclusions of this?
I think more importantly, this information, right, the SIR, is usually only privileged to the company. But as a retail investor, what are the signs that you could have picked up? I'm not saying that, hindsight is always perfect 2020, right? But what are the things that within your circle of competence and within the data that you have, you could have avoided some of it, right? One was definitely very easy. Your receivables against your operating cash flow against your net profit. That's, for me, there's a very big one. If you can, if those are the things that does not make sense already to you, right? What more to say when you have independent audit reviews like this, which go very deep. But the problem is we don't get access to these kind of reports. You only get access to public information, which is the financial statements and the annual report. Secondly, is you look at this, 76 million to build. If I'm not mistaken, this was the visual, the AR augmented reality IT contract that was supposed to build for maintenance, to train maintenance people to maintain oil and gas equipment. So 76 million. What can you do? You could actually use this to benchmark how big of a facility or how big of a project that they need to build, and what's the scope. So if it doesn't make sense, 76 million is quite a lot. It's about what? How many in Malaysian ringgit?
That's about
320 million. 320 million. My gosh, what does it cost to build a data center? So then you start asking yourself common sense questions. Does it make sense for a project of this scope to actually cost this much? And then you go and see that the profit they made only 5.5%. So don't worry if all this, especially to the new investor, if all this doesn't make sense. Just remember, when you run a business, You make sales, you make sure you're collecting the money, and then you make sure you're making cash.
Simple
That's
as
it.
that.
It's simple as that. I'm just simplifying all these three for you. If these three doesn't make sense, then this is to verify or to back it up.
100%, man.
Yeah.
Alright guys, if you're enjoying the video, remember to like, comment and subscribe. Click on the notification bell so that you know when new videos come out just for you. And of course, we actually have a new Discord channel, so please check it out. Link is in the comments and or the description. Okay, so we have two questions, John. One is, the first one, let's deal with that first, which is from Zesiang, right? Any thoughts on Alibaba?
Are you a shareholder?
Yes, I am a shareholder, to be completely upfront. And for me, I think Alibaba is one of those situations where there's a lot of what we call FUD, right? Fear, uncertainty, and doubt.
Right,
and the thing to understand is, I'm not saying this will happen, but usually great companies like that can only be bought at great prices if something is very worrisome.
Yeah.
Which then pushes the price down, right? Now, just because the price has gone down doesn't mean that Alibaba is a good purchase, right? You have to do further research. Now, there's a lot more to Alibaba. Of course, I don't think we can spend the whole video on this, but I think the important thing you ask about Alibaba is that are the problems that they're facing temporary or permanent? And that's not exactly an easy question, because I think for me as a shareholder, obviously I think it's permanent, but there are certain, there are temporary, but there are certain things that are permanent. For example, their dominance, right, in the space. Like for example, some merchants, last time, they were allowed, right, to create exclusivity with merchants where they would essentially say, oh, if you are a merchant for Alibaba, you cannot be a merchant for Tencent. Now that's gone already, right? Certain things that are a little bit more permanent would be things like the Ant Financial, right? Not being able to do what they can do.
Yeah.
So that has a damper on
valuations, probably.
Valuations and some of the potential. But then I think what doesn't go away is the simple fact that Alibaba is still
the dominant force. Absolutely
dominant. And the second thing is that word on the street is Lazada. And this is coming from some of the Shopee employees that I've been talking to, right? They're actually saying, right, that Lazada now is really ramping up, trying to take back their market share. And they're hot on the heels on Shopee, right? So obviously, the fact that Shopee is thinking this also means that it's also a great culture. So you can see there's massive competition going on. And Lazada is not going to die down just like that to Shopee, even though Shopee has done much better than them in the past 2-3 years, whatever it is. So my overall thoughts is that I think that there are certain issues that are permanent. It's more like the existing business is whatever problems, if there's no problem that they're facing. It's more on the periphery and all the things that could give them a lot more revenue in the future that is maybe not as good anymore. And that's why people are punishing. So the question is whether or not the punishment makes a lot of sense. Obviously, as a shareholder, I don't think it makes a lot of sense. So yeah, those are my thoughts.
I think the other thing that we keep forgetting also, MJ, is that whenever faced with an external problem like this, people forget that as if they view Alibaba as a company or as static. You have to remember these kind of companies that have built this kind of dominance whatsoever comes with a bunch of managers that are worried every day, thinking of how to solve these problems. They are hiring smarter and smarter people to overcome, or even they're not going to take all of these balls lying down. I put it this way, I mean, there's one thought that I think I keep on reminding people that whatever external forces, even like Tencent, that there's a new regulation being slapped on Tencent again, right? But then don't forget that there's a team behind a company that are thinking of ways and means to solve these problems. And I think if you look back even in history, when Standard Oil was just dominant, were they being thrown left, right, center curveballs?
Yeah,
they
100%.
were. AT&T, they had to break them up, and yet they still were dominant after the breakup. So to your point about, Ant Financials not being able to do what they do, yeah, it may be true. They may have to be forced to spin it off. They may be forced not to be able to do microcredit lending schemes and all that kind of thing. But because of their position in China, I doubt the Chinese government will just want to slaughter the golden goose.
Yeah.
That's my thought. So if you put it into context of risk reward, always think of what are the probabilities of things that can happen. Then you assign a certain probability to it. Can it happen to the worst case scenario? Yes, but what's the probability?
That's right.
Yeah. So do you want to move on to the second question?
Yeah, second question is by VK Tiger on Instagram, right? He asked this question quite a while ago, but basically what do you do when a stock has good fundamentals but the price is not moving, I think this is a very legitimate problem.
Yeah.
You have to understand that, businesses don't move up just like that. And it's of course
not linear.
when you look at friends, left, right, and center buying stocks that go up so much. Of course, they never tell you the stocks that go down, right? But I think the only approach is to, what I would do in your situation, let's say you buy a stock and the fundamentals are good, but it's not moving, right, is to either just be patient or to find a stock with better fundamentals, right? Because, one argument is that, okay, you need to find stocks that are in vogue or has what our good friend Peter said, follow-through interest. The fact of the matter is to gauge follow-through interest is very difficult and almost impossible.
Yeah.
And the only way to do it is to be full-time into this. Most of the people listening, they don't have that kind of time. And so that's why you have to be patient and you have to be accepting of having so-called lower returns in the short run.
I think more importantly, we have to qualify when it says not moving in price. What is the duration that it's referring to? If you're talking about a week, I think you have to change the mindset about the duration.
But let's say it's a year, right? Let's say a year and a half, right?
Yeah.
I think the same still stands, right? Like Peter Lynch used to say, like he would own stocks where, only in the 5th or the 6th year it will start moving up.
Correct. Yeah, put it this way, we are not here to issue buy or sell calls. I think where you need to develop conviction is that how well do you know the fundamentals?
Yes, 100%.
Because if you don't understand the fundamentals well, it doesn't give you conviction. Like for example, and we've said this many times in our video, we own MFCV, has not moved up.
Yes, correct.
Right? And we look at it, it's like, my God, this is a steal.
Yeah.
This is a steal. But then at the same time, how much do you know about the company? How much do you trust the management to hold and to have that kind of conviction? Because if you don't, then whether it's 1 week, 2 months, or 5 years, you will definitely have the fear of, whether you made a wrong decision, you start to question your own decisions and all that kind of thing, and probably sell at a point where it's just about to move.
100%.
Yeah.
Totally agree. I guys, hope you enjoyed the video. If you think that someone would appreciate and benefit from this video, do share it with them. Follow us on Instagram, Facebook. We have a Telegram group chat. Of course, we just launched our Discord, so check that out. And see you in the next one.